Over the next 15 minutes, I really want to talk to you guys today about how we perceive the changing face of bureau data and what's likely to happen over the next couple of years in the business information world. I've been in the industry far too long, for nearly 22 years, selling credit and business information. I originally started in the marketplace with InfoCheck. Some of you will remember, probably recall those Alcatel systems that were introduced. And I was one of the sales guys that was carrying around one of those Alcatels in my case to demonstrate business information. When I look back over the last 10 years, the information gap has certainly changed. There was quite a large supply 10 years ago of information. Obviously, over the periods of time, we've seen a number of changes in the Companies Act, which have meant that information has got less and less, particularly as the thresholds for businesses filing, especially abbreviated accounts, has actually reduced. What happened then in 2007, 2008, when the credit crunch happened, was that the need for information got a lot higher, as we see there. So we're talking about the information gap and what that has meant to you as consumers of information in the UK. Some of you may be aware of this document here from BIS. It's a discussion document at the moment. Basically, the government are currently looking to review the filings of businesses, particularly SME businesses in the UK. The threshold, the constituency of what they refer to as an SME business, believe it or not, is 25.9 million. So any company from a zero turnover to 25.9 million could effectively be part of this discussion document. Now, for us, that represents 80% of the entire UK market. The government discussion document typically sends out mixed messages. On one degree, it says that they're actually looking at companies not filing any accounts at all, but there is a flip side to that, is that there is actually areas within the document where information is going to be more accessible. The ICM survey, when we looked at it with Philip, 37% of you that were surveyed said that you would not approve an order or trade cash with order if no accounts were available. 48% of you said you would ask for accounts which would delay the provision, because obviously in obtaining management accounts and then the degree of accuracy and trust in what you could actually refer into those accounts. And Philip was right in terms of his blog. He said access to credit comes from greater access to information. And I think we all agree that more transparency of data that's available and access to information is imperative when you're granting trade credit. There are some good things in terms of the document. There is a clause in there, clause 3.13, which actually suggests that although they're not talking about filing financial data and accounts in the same way that we do today, they're talking about trading statements, a position of balance, and simplified annual returns. Well, the annual return is fairly simple at the moment anyway, so how are they going to simplify that further? I really don't know. But they are talking in terms of the annual return about putting a number of employees in, which we think is a good thing. That's more data for the bureaus. Also, the ultimate beneficial owner, and again, there's a lot of questions about who are the ultimate beneficial owners of the business. The trading statement, the position of balance, and annual return, they're actually talking about that being available to all businesses. So what that means for us as credit reference agencies is particularly non-limited businesses may actually be able to file certain degrees of information. Now, clearly, that is more information for us as bureaus, and we would obviously welcome that. In terms of the UK market, historic UK scoring models have typically been around financial data, largely supported by accounts information, demographic data, the industry and geographic information, and then official data, finally followed by payment information. As the credit crunch hit the market, clearly it was highlighted that the use and relevancy of data needed to be more up to date. And bureaus are tasked with improving the relevancy and reliability of data and risks. It won't be a surprise to you that Graydon are currently looking at different models, and in particular, we see it elevating the payment data from the fourth position to the top position, because clearly that is more predictive in terms of determining risk. And we're currently evaluating scoring models similar to those used on the continent, where payment data is more relevant to actually predict risk more accurately. So what happens? How do you close the information gap? Well, there are three main areas that Graydon has been looking at over the past 3 years. Payment information, We're largely supported by our customer base in terms of the supply of information into us on payment information, but we want to enhance that. We want to improve that. I think, again, a research document that the ICM was involved with suggested that only 25% of credit managers and their companies actually contribute payment data to the credit bureaus. Yet 75% of those actually said it's very relevant in terms of assessing risk. So we need to close the gap in terms of the supply of payment information. Management accounts, Graydon has been part of the Credit Pal initiative in terms of encouraging businesses to file management accounts. This has been a slow burner, but we're still actively involved and we're still obtaining management accounts from companies today. And market intelligence, back in 1992, Graydon launched the first intelligence network for a common group of customers that have a common customer base to share information. That brings more relevancy in terms of what's happening within those customer bases today. Peter Whitmore from Ingram Micro has kindly agreed to join me today on the stage just to talk to you about what market information means to Ingram Micro and where they've used the data particularly. Peter.
Morning, everybody. Thanks very much for letting me come and talk, Craig. I think probably a lot of people agree that a critical part of credit risk analysis going forward is the relationship and the accuracy of the up-to-date data that we get, coupled with good quality market intelligence. You know, Gary alluded to the fact that, you know, you've got to know your customer, and we're very much doing that. And we're now finding ourselves where we're having to know our customer's customer. Regular visits, gets regular supply of data. And that really is where the market intelligence starts to come in. We've also developed good relationships with our insurers, face-to-face meetings, and that allows us to build a really honest relationship where you're not afraid to say what the real situation is at the risk of losing a limit. But probably more so for today, it's the relationship we develop with the credit agency. Now, we've got a trusted relationship and we deal with individuals within our sector that understand our market sector. So the market intelligence that we receive is specific to the job that we're doing and the customers we're dealing with. So we don't have to spend time explaining what it is we're looking to try and get out of it. We also make use of some extremely good tools, and obviously Craig would expect me to say that. But we've got some tools in there that we use. We use a system called Excellence, which is fully customisable to your own payment experience. So you can take your base reports out of your credit supplier and fill in your information as well. So that helps really to allow us to make a solid risk decision based on our own experience as well. We're using a tool called ePatrol, which is a monitoring system, and there are a number of them out there, but I particularly like it. I find it very user-friendly, and that market intelligence appears for me first thing in the morning. So as soon as I get in, I can see what the latest situation is on the customers and those that are affected most significantly. And I suppose we're looking to make use of those tools to drive our sales guys, as everybody is. I'm sure a lot of credit guys get sick and tired of sales coming over with lists of people saying, can you credit check these? Which ones can we sell into? You know, we've tried to turn it on its head now by using some of these tools to the extent that we produce a list and say, here you go, here's 500 that you've got credit limits for, go and sell into them now. That's been interesting, a nice challenge for sales, that one this year. I suppose, above all, what I'm really saying is a good, strong relationship, up-to-date data, and accurate market intelligence is the key to the future of granting credit and protecting our revenue. And likewise, we do supply payment data, not only into Graydon, we do it into all of our other suppliers as well.
So in terms of the enhancements, as Peter has alluded to, we play a we've heavily invested in terms of the areas that you see there highlighted in green. Management accounts with Credit Pal, the market intelligence with the 6 industry groups that we're involved with, sharing client data, more up-to-date information. Sometimes financial data can be so out of date, and payment information even doesn't detect the fact that there is an issue with a company. We had mutually together a situation a couple of weeks ago where a director created a hole in the accounts fraudulently. That information got shared around the marketplace very quickly, and obviously Peter and his peers around the IT sector were very quickly able to react to withdraw credit limits. It's that sort of information, the relevancy, that we see as important to give you guys the tools to make the decisions that you need to make. And payment information, we'd encourage everybody to contribute to payment information schemes, not only with Graydon, but with the rest of the bureaus, because that is going to close the information gap that is likely to be created if this document actually comes into place. So how do we understand the relevant risks? Payment data is clearly an important factor, and as I say, plays a lot of relevancy in terms of us looking at risk. Fraud and intelligence from the marketplace, from the coalface in terms of what's happening to those customers. Financial data, live feeds from suppliers where we can obtain that. So that equals, ultimately, our ability to predict risk more accurately and provide you with better decision-making tools. I wouldn't be able to stand here today if I couldn't just quickly run over a little bit of marketing blurb on Graydon. I'm sure many of you know us, but I'll just summarise in terms of a little bit of our background. Our mission statement, the key area there is relevant credit information in a convenient and professional manner, helping clients make reliable risk management decisions. Graydon was founded in 1888, for those of you that aren't aware of our history. We were named as Van der Graaf Bureau Woerdenhandel. That's the sum of my Dutch, and thank God we changed the name to Graydon. Today we stand at a turnover of 78.2 million as a group and are established as a leading global information supplier. We supply our information to more than 20,000 customers in over 40 countries globally now. I'm working with global brands. Some of the global brands that we work with are listed there. Some are actually in the room today as well. Thank you very much for your time today.